Hi everyone, this is Richard Reyes, your Orange County real estate professional. Today I want to talk to you guys about 5 things you might want to consider before buying your investment property. Stay tuned and we'll go over them. Number 1, know the location. This is something that you need to do way before you think about where you're going to purchase. Start looking at what cities, what part of the city is actually better. If you're investing out of state or you're investing locally, what rents are in the area. You also want to check out the neighborhoods, because one neighborhood can differentiate from a different neighborhood, even though they're in the same city. So rents are a little bit higher in this neighborhood, rents are a little bit lower on the other neighborhood. So you really got to consider that too. So you want to do a little bit of homework before knowing where you want to purchase. Number 2, the down payment. Now, the down payment differentiates from a first-time buyer as to an investor. As a first-time buyer, of course, you could buy something at 3.5% as a first-time buyer to purchase your single-family house, duplex, triplex, or fourplex. But if you already own a property, let's say you own a single-family residence and you're looking to invest into a duplex, triplex, or fourplex, then at that case, you're gonna need a minimum roughly about 20%, anywhere between 15 to 20%. Of course, it could be a little bit less depending on the lending, but just to give you an idea, always prepare for 20% down payment. Number 3, another thing that you want to go ahead and think about is expenses. You want to know what you're getting yourself into. You want to prepare yourself. So when you actually look at a property that you decide, hey, this is a property that I want to purchase, you want to analyze the property, right? So you want to make sure that you set aside expenses for maintenance, like the lawn, repairs, whatever comes up. You definitely want to prepare for that, because things always come up, whether you got to fix a sink, whatever the case is. So you always want to prepare for expenses or unexpected expenses. You want to calculate that before even buying the property to see if it's going to be a good investment or not. Number 4, do you want to manage it or do you want to hire a management company? Now, personally, I have an investment property and I don't manage it myself. So that's another thing that you want to consider. Do you want to be actively involved or do you want to hire somebody else to take care of dealing with the tenants, dealing with the maintenance of it, dealing with the phone calls? Do you really want to deal with that kind of stuff? So that's another thing you want to consider. And also, this goes back to analyzing the property. When you analyze the property, you always want to analyze it for that as well. For not only the expenses, for management, if you're going to choose to hire a management company, how much is that going to cost you? So that way it gives you a better idea of how much cash flow you're going to get back if you do hire a management company. So that way you don't have to be the one involved or dealing with the tenants. You have a management company for it. Number 5, you want to know the risk. So this is very important. And I know I keep bringing up the fact that you have to analyze the property, but this is how you can minimize your risk, by analyzing the property, analyzing the area, knowing that this is actually going to be a good investment, depending on what your goals and what you're trying to achieve. Because that has to do a lot with where you purchase, why you're purchasing the property, and so on. Now, most investors, of course, purchase because of cash flow. That's one of the main reasons I think most investors actually invest in rental properties, because they want some of that cash flow. I mean, there's other perks that come with it, tax deductions, depreciation, and so on, which are really great. But you want to make sure that you know what you're getting yourself into, and even talk to other investors. They could help you out. They're more than willing to talk to you about what they've done wrong and what you could do differently. And those are the 5 things you might want to consider before buying an investment property, so you're better prepared for anything that comes up. Now, of course, things always come up unexpectedly, but at least you're better prepared for whatever comes your way. If you guys like this video, please hit the like button. I would definitely appreciate it. And go ahead and subscribe. I put in new videos every Thursday. And if there's anything I can help with, reach out to me. I'm in the Orange County area and also service the surrounding counties as well. I look forward to talking to you guys and see you guys in the next video.